Right. Welcome to another edition of the Forecast Contest discussion. Today is December 3rd, and we're forecasting for, I think we have the wrong window here, but it's the 18th, is it?
18th to the 22nd.
18th to the 22nd. And we have a special guest with us, Steve Bennett. For today's discussion, Zach Magis is going to be our driver, so I'm going to turn it over to Zach.
All right. Good morning, everybody. Hope you all enjoyed your Thanksgivings. I know I certainly did and ate too much. So just start off a little bit of forecast attribution, and then I believe we're going to move, and Michael and I will do our communication piece, and then Dave and Steve might share their forecast. But other than that, we'll just talk about the most recent verification and the most recent forecasts. So to start off with the attribution, I'm looking right now at the table. And as I had tweeted out earlier, I believe only one human participant did better, had a positive CRPS score. Industry number one, but just barely, only about 3.8. Other than that, most of our human inputs were fairly low. So if we switch over and look at the pattern, I'm looking right now at the average temperature departures from the 27th to the 1st. As we can see, some pretty anomalously warm temperatures in the southeast, a bit colder in the northeast, and then pretty strong cold throughout the western half of the U.S. And if we switch over to the 500 millibar departures, we can see this pattern, which kind of matches up with what we saw on the surface. We have a very, very strong trough pattern in the west coast, ridge pattern in the east, and then also a very strong trough off the coast of the U.S. So it's obvious that not many of us did a good job at resolving this pattern, so I thought it'd be interesting to look at some of the inputs that we commonly use. So this was the CPC's forecast, their 3 to 4 week outlook for this period. Granted, the dates don't match up exactly, but we can see that they were projecting some sort of ridge trough pattern moving west to east, not trough ridge. And I know, for example, Dr. Decker bases his forecast entirely on the CPC, so he might have struggled with that. And then if we switch over to the 16 to 20 day report from November 12th, the mark date of this forecast, we can see what Maxar's forecast was. And since they were the best, it might be interesting to look at what they projected. But we can see in the bottom right corner, we can see the EC and the CFS's forecasts, and we can see that the EC kind of got the ridge pattern in the east, but not necessarily resolving the trough in the west very well. And the CFS didn't seem to have anything close to that. So I guess that's kind of just a general overview about what happened and then what some of the forecast inputs were showing. So does anybody have any comments? I wasn't here last week, so I don't know if this pattern was similar to what we saw last week or not.
Could you go back to the verification one more time, just so we can see
this one?
The difference? Yeah. And then also, can we see the temperature? Flip it back to the temperature. But no, this is great. It's great. Okay. Yeah. Wow. Jeez. Versus the forecast. Yeah. I don't know, Michael. I have a couple thoughts, but anything on your end, anything jump to mind in terms of looking at this attribution and the forecast versus the verifications?
It looks like they underestimated, based off of the ridging we saw off the west coast near, I think, British Columbia, off their coast. I think they underestimated the strength of that ridging and underestimated the cold as a result. That's my 2 cents on this.
Yeah. Yeah, I mean, when I look at this, right, this is one of those classic cases where, you know, even in some respects, the the numbers give this an appearance of a better forecast than actually what verified. I mean, when you look at this spatially, it looks a lot worse, right, than even what the forecast numbers. I mean, you know, you showed, you know, the best forecast out there was the Maxar forecast, and I think you showed the temperature pattern of more of a, yeah, warm in the west and kind of cool in the, or less warm in the east. And then can you flip back again? I mean, you know, the west was, you know, some of the coldest areas were in the west, in the northern Rockies and stuff. So spatially, I think if we looked at this from a point forecast, the scores would have been a lot worse. You know, just like, hey, look at it, verify for Chicago, verify for Billings, Montana. But it was kind of one of those things that kind of offset each other, so that the actual numbers, you know, in theory, right? Like if you didn't have population weightings, and if you forecast, you know, if your expectation was a big warmth in the west and big cool in the east, that was going to net out normal, right? That was your expectation of forecast. And the exact opposite verified. It was really extreme cold in the west and warm in the east. From a station level, you would have done horribly, like if you verified at a station level and then scaled that up. But from a national level, you might have got it perfectly right, right? It's just the spatial patterns would have been completely wrong. So I think this, I guess the point here is, though, that one, it's really good that we're looking at it spatially. I think that's great. And it also reminds me of what a few folks have mentioned, more than a few folks have mentioned over the last few months, which is it would be great to have a little bit more of a spatial component to this, so that we can make sure that we're, you know, getting it right for the right reasons, or vice versa. The one other thought that comes to mind, more getting into the attribution again, it's funny when I think about my individual forecast here, and I think I did pretty poorly, and I was looking at this earlier. If you could pull it up real quick, Zach.
Yeah.
Just the forecast table. So I think I say, so my number here is 120.5. And what's funny is, look at my fudge factor here. I put in a +7 fudge factor. I remember this forecast. And if I hadn't put in that +7 fudge factor, which I think my fudge factor was a function of, at the time, I think I was thinking it's in there somewhere. It might have been MJO or something like that. And I was just thinking that there were a few other cold variables that might not be baked in. So I went +7. And of course, that +7, this is a classic case of, you know, thinking that maybe I could add value based on some of these other factors, but certainly in this case, I did not. If I had just kept what my formula had shown without the fudge factor, 113.5 or something, I would have been much closer to the verification. I would have done much better. So just interesting. It's great. Again, it's great to be able to go back and look at this so I can think through it and actually try to learn from it too, right? So it's not just, you know, I suck, but it's also kind of being able to go back retrospective and try to learn from this and think about what I was thinking, and maybe trying to tune that, make it better in the future. Yeah, there you can see my fudge factor here. So I guess anything, you know, when I look at the MJO and tropical forcing here, I don't have any clear thoughts as to, you know, how it kind of steered the forecast, maybe colder or warmer. My only other observation from this is probably still like with the EC and CFS. If Zach, if you don't mind, maybe just pulling up the heating season, table. That it's interesting that those forecasts are still near the bottom when you sort it. So EC, CFS, near the bottom, actually at the bottom in terms of forecasts that have, you know, have you know, contributed majority of the time. So that's, I think, also an interesting data point.
Like I said,
Can I weigh in here for a second?
Yeah, go for it.
And could you guys go back to the forecast verification table, or is that this? Sorry, I'm still kind of getting my bearings on what's what visually.
this is the heating season table. Do you want just the
weekly
weekly
Yeah,
one?
just the weekly, the 1 week that we're talking about here. So if I understand this correctly, the verification was 114.6 at the bottom there.
Yeah.
Yep.
And that is within the margin of error of everyone's forecast. Is that right? So is that what the spread column means?
Yeah, it's a one standard deviation spread. So yeah, I think
Well, people change it to make it like 1.5 or something like that. But that's just
yeah,
spread. Yeah.
yeah. It's intended to be your one standard deviation spread. So that in some cases, if you have super high confidence, that might be 3 HDDs, and if you have super low confidence, that might be 50 HDDs.
Got it. So I don't really know what this spread is in regard to whether people were confident or not confident, but what I see is that the verification fell within everybody's range.
Yeah, yeah. I see.
So the observation I'd love to make here, just for the record, and I was trying to figure out how to word this well. I'm not going to word it well. I'm just going to be blunt with it. This is why people hate meteorologists. So, essentially everybody's forecast was right and nobody's forecast was right at the same time. I think this is a great example of how a nationally gas-weighted HDD value is, in this case, pretty meaningless, because the forecast was completely wrong, right? From a pattern perspective, from a meteorological perspective, what I hear you guys saying is, everybody was really wrong. And yet the numbers show, it was fine, not a big deal. And the average, the average, when you look at sort of how the gas-weighted degree days average out, Dave, you're off by 6, right? I think this actually gives strong credence to basically saying, we as forecasters have to do better at our own validations, verifications. This was a completely useless forecast. And yet the numbers kind of show it to be in the range of what we should expect. So I don't know, I guess I'll stop there. That was just a thought. Channeling my inner Jason Lynn.
No, I think that was a more eloquent way of saying what I was trying to say about, how spatially and from a city standpoint, from a station to station standpoint, you're right. There were so many forecasts that were wildly off, right? For so much of the nation, especially the Southeast, the Ohio Valley, that whole chunk of area, which verified way above normal. And then the whole Western, or at least 50% of the Western states, and in particular the Northern Rockies, which were wildly off, right? Not that they weren't, it's not like they were forecast above and verified normal. They were forecast above and verified far below normal. Yeah, no, I think that's a good point.
And I think this is where it's really important to know what your customer is doing with the forecast. So, if I could truly make a bet on gas-weighted degree days, right? If that's all I cared about was gas-weighted degree days, and that was it, then, this wasn't that bad of a forecast, right? And basically what I say is, I don't care if you get the spatial pattern right or not, right? Don't beat yourself up over it. I mean, the gas-weighted degree days came out not bad. If you're the CFS, not bad. This is also why people think that if that's all I need is gas-weighted degree days, I might not need any of you. I might just use the CFS, right? Because it can get the pattern totally wrong, but still get the gas-weighted degree days pretty close.
Yeah.
Is that also does it have something to do too with our performance metric? Was again, most people did poorly, but if using a different performance metric, that would have made our forecast look worse, better?
That's a good question. I mean, I don't know. I mean, I don't think a different metric would have had that significant of a difference. Now, the CRPS is benchmarked to the 30-year normal. So the 30-year normal here did fairly well, right? So it was this was a forecast, which, it happens that the verification verified very close to normal. So normal is difficult to beat, right? Normal was within 3 HDDs of verification. So, if we had used a different benchmark, that could change things. But yeah, I don't think it would. I don't think it would have changed it that much. Now, if we had used some sort of spatial like metric, that certainly, right? So instead of forecasting a national number, somehow if everyone was forecasting at a station level and then scaling that up, then I think the numbers would have been far different.
Do you guys have a sense for? My guess is this is kind of a theoretical exercise, meaning you're not really the customer, the theoretical customer that you're aiming at theoretically can trade gas weighted degree days, just this number alone, right?
Mm-hmm.
Do you have a sense for how the market reacted to this forecast, to this verification versus the forecast? I don't, because I'm not still plugged in really. Dave, do you know?
Yeah, no, I don't think this forecast per se caused so much of a disruption, but I believe there was a period here over the last couple of weeks when the forecast turned warmer, where where it did have there was a market reaction to that with gas prices going down, right? Because we had a period of pretty cold weather or kind of back and forth a little bit, and then the models last week in general went warmer, and that had had some impact, I think, on the market. And then I haven't looked today, but in the last couple of days, it's kind of swung back a little bit the other way, colder again.
Okay, gotcha.
So, and but it's funny though, just it sucks, right, that I can't answer that question better. And in part, that also reminds me of why it would be really helpful for us to have someone who's a little bit more into in the markets involved with this, right? Who can look at some of those relationships a little bit more in more detail to see where some of those inflection points are and stuff like that. What might be moving the market and things like that.
Yeah, agree. Totally agree. And it also I think should give us a minute of pause to basically say can we form a realistic theoretical customer, I think and we know the market follows the forecasts as well. In other words, so the market will react to the forecast regardless of the verification. So that complicates things a little bit further in a discussion like this. Just stuff to think about, I guess.
Yeah. I mean, there's a lot here, and then there's no wonder why, when you see a forecast like this, we've been doing this contest for a while now, and it's been very challenging for any forecast to consistently be the 30-year normal, right? And I think it's examples like today which kind of highlight it. I mean, again, you could even argue the CRPS is inflated today. I think that's sort of Steve's part, or not that it's artificially inflated, but it really gives a false sense of value because the actual forecast verified it seems like none of the forecasts really captured the actual pattern, right? Which was so wildly different and not predictable, at least in our table here.
Yeah, I sort of wonder if a valid research project might be to focus on creating a forecast metric that really reflects impact.
Yeah.
And that probably needs to have some sense of geography to it, not washing it out nationwide, right? I don't know. Just a thought that might be something that could be quite useful for the marketplace. If there was an index of some sort that was really weighted by what the market can trade. That's what the market thinks gas weighted degree days are. So perhaps if you talk to a gas trader, they would say that this, that this forecast was fine because, it averaged out. It was cold in the West and warm in the Midwest and cold in the Northeast. So it all washes out from a national storage perspective. My guess is that's probably not how the market feels.
No, and from my experience, right, in a lot of cases, the market's savvy enough now. It looks at things. It looks at important pattern drivers, right? So, like if today's model run, even if the U.S. temperature or HDDs really didn't change much for the 15-day period, if the Alaska Ridge was, I don't know, significantly stronger on day 10, there's a good chance, right? That would drive a market change because the market realizes that it may not be in today's forecast, but in subsequent forecasts, that Alaska Ridge is going to drive colder outcomes. And so I think that's kind of part of the point you're trying to make there. I think it is, and that's why it is still really important to look at things like that, like not just look at how the forecast verified from an HDD perspective, because it can cover up some things. Like, okay, it may be that it didn't have it didn't have a dramatic HDD impact in this forecast, but more times than not, I think it's when the models aren't predicting well the major patterns, right? Whether it's NAO, Alaska Ridge, or in some others, those are going to be the opportunities in situations, well, one, where there are market impacts, but two, where there's going to be the potentially massive HDD failures, right? And so if we can identify situations associated with with models failing on predicting Alaska ridges or troughs and things like that, then there's probably a good chance that we can identify things that are going to have meaningful impacts on the market.
Totally agree. And I think that is a takeaway that I think is perhaps the most important takeaway from today's whole discussion, regardless of the forecasts and the verifications, is in some sense, this table is forecasting something that may not be the best measure of impact.
Mm-hmm.
So, that actually might be a place to put attention going forward from whether it's a student research project or whether it's one of the professors who's listening in on this call, to the recording or whatever. To me, I think this is one of the ways that we as a profession get in trouble and lose credibility is exactly this outcome. And this happens more frequently than you might think.
Is there any of our guests that we've had over the last 6 months actually plugged into the market that I could, reach out to and bring back in, or like who would be that? Who would that be?
Yeah, Matt Lanza certainly is plugged in, and Jason Lynn I think tends to be plugged in, and Bob Maxar is going to be plugged in to a degree because just they're talking to clients all the time and stuff, so they're going to be pretty plugged in. And who else have we had that I'm forgetting? Matt Rogers is going to be plugged in very well. We have some of the other Risk Pulse guys coming next week. John Davis and Mark Russo, so they'll be plugged in. I think any of those guys we could
ask market related questions.
Yeah,
too.
absolutely. Yeah.
Okay.
I'm willing to bet those guys would probably also, like, if you're interested in hearing about the market impact for this specific forecaster in this particular time period, I bet any one of those guys would take your call. Just want a one-off, just to kind of, help you think through things.
Yeah, absolutely, definitely, and there's definitely, I know it's an endless list, but it's not a ton of work for us just to get some natural gas price information and just to correlate it with some things. That's something else we can consider maybe for the spring semester or something like that, even just to look at something like that, or a corollary to some of the research that you're doing, maybe. You want to shift over?
Yeah. Does anyone else have any last thoughts about this attribution section of the discussion?
I had one quick thing. I remember there was supposed to be a negative NAO during this period that most people, I think, attributed to the cold in the east, or at least the cold that was supposed to be in the forecast for the east. Is that possibly a reason maybe it didn't materialize as to why the forecast was so, I guess, opposite?
That's good. That's a good question. A little bit negative NAO, I guess. You could see it. Just, I'm just laughing because I mean, this pattern. It's like, you know, you had a somewhat of a negative NAO. Like I don't know what that registers on the index, but you see some blocking in Greenland and troughs in Europe and a little bit off the East Coast, and then you also have some ridging in Northwest North America, right? A little bit in the Yukon, a little bit in Alaska, but it's just I don't want to call it a weird pattern across the U.S., but in another world, right, you could see a big trough in the eastern United States, I guess is what I'm thinking to myself, and it's like, this again is why I think sometimes it's really difficult to forecast these things. I wish we don't have what the models were forecasting the height pattern, do we, from November 20, whatever it was, 12th? We just have the surface pattern, right?
This is the surface pattern?
Yeah.
Yeah, no, I don't believe we do.
Yeah.
I believe so.
But yeah, what do you think about that, Michael? Any other thoughts on the NAO? Is that what you were?
No, I mean that looks like a negative NAO to me. I guess it must be the orientation of the pattern that just was just off slightly, as it always ends up being.
Yeah, isn't that part of the problem too? It's the game of inches. It's like I think I said this a couple weeks ago when I asked Professor Torn one time about what we were looking into model errors and stuff, and we wanted to we asked him, what do you think are some of the sources? Give us a start, give us some of your ideas and stuff in terms of what forecast might be susceptible to the highest errors. And he said, well, the place I would start and look at is where situations where there's strong temperature gradients across the area that you're interested in, right? And I look at this and I'm like, wow, if that trough over, near east of Maine was just shifted a little bit further to the west, right? It could have been had a major difference. When I say a little bit, like a few hundred miles, right? Which in the scheme of a thing in a 16 to 20-day forecast is not that huge, right? That forecast could have been a lot colder, right? You would have had a lot more major cities. And so in part, some of it is not, again, your spatial error, your spatial correlation could be normal, could be average. But if it just happens to be that the gradient is near the Chicago-New York corridor, that could really impact the HDDs, right? Versus if that gradient is in, I don't know, Salt Lake City, right? If that gradient shifts 300 miles, it might not be a big deal. But if it's near Detroit, that could have a big influence on the HDD forecast. Okay, let's switch over to the forecast.
Sure. All right, so here we have this week's forecasts for December 18th to December 22nd. I don't know if you want to just jump into the communication thing, or maybe you want to talk about your forecast a little bit before we do that. I don't. It's up to you, dude.
No, we can jump into the communication.
Sure.
Yeah, that's sure. Michael, do you want to kick us off?
Yeah, sure.
So again, Steve, this is where what you did last time was great. So you're the client here. So and you might be in a bad mood today. I don't know. No, but just jump in wherever you see an opportunity.
Will do. You just told me that a horrible forecast was great, so I'm in a pretty bad mood.
All right. Should I get started?
Go for it.
All right. Okay, so hello everyone. My forecast was for 135.6 HDDs with a 1 sigma spread of 27 HDDs. This forecast is a bit lower than the 30-year normal, about 10 HDDs warmer than the 30-year normal. With the a similar spread, so average confidence for the forecast. My forecast is a blend of teleconnections, the CPC, and the 30-year normal. Looking at the teleconnections this week, the AO, NAO, and PNA all appear to be positive. So this kind of looked to me to be a progressive pattern with no clear consistent warm or cold. During this period, it'll be more of a transient, any warm or cold shots will be transient and short-lived. As for some risks, if one or multiple of those indices were to become more strongly positive or more strongly negative, then that could pose a significant risk to the forecast, putting more blocking. For example, if the NAO were to verify negative for this period, then that would probably lead to a much colder forecast than what I currently have. Another risk would be, I didn't look too deeply into it, but the MJO, always a risk factor, at least for me. So I believe it's in phase 2 right now, but the model forecasts seem to be all over the place, at least when I looked at it last night. So it could be a big risk if it goes into one of the warmer, colder phases or winds up a bit stronger, since the pulses didn't appear to be particularly strong. Kind of near the cone of silence, or whatever they call it. And as for percentages, I'd say there's about a, based on the range, 111 being the lowest forecast, I'd say there's about 5 or 6% chance we get warmer than that. And as for the coldest, which appears to be 146.9, I'd say there's about a 1% chance that we get past that. And that's it. So are there any questions?
Yeah, I have a question, Michael. Your forecast is about 10 HDDs warmer than one of your competitors, industry number one. How confident are you? Why, or I should say, why are you warmer than them? Why do you think, what's the difference there? What are they seeing? What are you seeing that they're not?
The way, well, I see the pattern being more progressive, so there's no chance for any kind of sustained cold, especially without the assistance of a negative AO. I just don't see how we would get um, a good shot of cold air without the AO being involved in some way, shape, or form, or at least one of the other, or at least a negative NAO, maybe coupled with a neutral AO, would even be helpful to get to colder pattern. So I think there'll be more warmth than cold for this period, at least relative to the 30-year, based off of that.
I have a question too. Dave, did that answer your question?
Yes, thank you.
Michael, you're 135 with a spread of 27. Again, just trying to work to make sure I understand what that means. So I think that what that's telling me is you're saying there's a 70% chance, roughly, that you're plus or minus 27 from 135. Is that right?
I'd Yeah, I'd say 70-75%. Within plus minus 27 of 135. Yeah.
Okay. So that leaves, so you said 70-75%. So that leaves about 30% of the probabilities outside. Talk to me about the high end versus the low end. So is that equally distributed in your mind? So there's a 15% chance that it's going to be colder than whatever that is, 152, and a 15% chance that it's going to be warmer than 108.
So I think I misunderstood what you were asking. That should have been more along 90% it being in the range. That's my mistake. It's more of a 5 or 6% chance it's outside the range on the warm end, and uh, really a 3-4% chance odds it's outside the range on the cold end.
And what are the physical factors that are behind the difference between a 3 and a 4% chance and a 5 and a 6% chance in week 3 or 4?
You mean like how do I come up with those numbers?
How in the world can you be so precise in this time period to be talking about a 3 or a 4 versus a 5 or a 6?
Well, it's more of a part of it is I'm gonna think of the word here. I guess intuition is a I don't know if that's the word I'm looking for, but it's close to it. Kind of like I guess a gut feeling that's
So
based off the data.
your gut is so precise in weeks 3 and 4 that you can tell the difference between a 3% chance and a 6% chance. You're awesome, dude. Like, I'm giving you a hard time. I think at this long lead time, think about how you're communicating from a precision standpoint. We're really not good enough, right? You're probably more correct in saying that there's a 70% chance that you're going to be between 108 and 152. Climatology would tell you, so the normal tells you the historic spread. So 70% of these periods have been within about 16 of normal. So what you're telling me is that there's a lower than climatology confidence in this forecast. That's what your numbers are telling me. I think the words are telling me something different. So what I hear you communicating is that if you're going to be wrong, it's going to be warmer than you think. It's not likely to be colder than you think. And I think you're communicating that effectively. It's just not it's just as you start to quantify it, the story begins to break down.
Yeah, I use the spread for the 30-year, which is 27, not 16. That's for the 10-year. I don't know if that how much of a difference that makes overall, but I was just thinking, going with the range of the forecasters here of 111 to 146. I was thinking when I gave those numbers that, well, I don't really want to say 10% chance of it warmer than 111 because that seems that seemed a little bit far-fetched, and B, I didn't kind of want to, because I really don't think it'll be colder than 146. I didn't see anything that would indicate it'd be colder than 146 really, unless something drastic changes in the next 5 to 10 days. So I wanted to.
I mean, just saying that's making a really strong call, right? I mean, that's saying that's a very high degree of confidence in a week 3 that I would worry about if I were you.
Yeah, I agree. Think about that. I mean, maybe that's what you believe, but on the board here, normal is 147 basically, and you have one of the industry groups at 146. So to say that it's really unlikely that it could fall, anything above 146 or something, I would as a client, I would definitely want to drill into that. And because if it is the case, and if I really believe you have strong support for that, that could be a real opportunity, right? Because there's really such a strong skew to the forecast.
And what I look at when I see the numbers here, what I'm looking at is if I squint a little bit and think, okay, the ECMWF is pretty widely followed in the marketplace. We'll assume industry one is also pretty widely followed in the marketplace. What I'm seeing here is that those are sort of on the cold side, right? So the EC's 141, the CFS 140, industry one, I think, is colder than those. So what I'm going to believe here is that the market is generally thinking cold. So the opportunity for surprise is on the warm side. So if I'm trying to bet the low odds, then I'm thinking the market surprise comes if it's warmer. And I see you on the warm side. So that's where I start trying to get a real sense for what your actual probabilities are. And if you're telling me that there's a 90% chance that it's going to be warmer than industry one, right? Yeah. I'm going to bet the farm on that. And if you're wrong, I'm going to fire you.
Yeah, I mean, I guess with the accuracy, I kind of got a little mixed in with shorter range accuracy, where you wouldn't really have a margin of error of 30% most of the time.
Yeah, and I think that's important. I know I'm giving you a hard time. Dave told me to be in a bad mood, so I just kind of this is something I think as you're headed out into the forecast world, I think it's really important. It's really, really easy to be overly confident in a forecast, especially when you start saying intuition and gut. Your intuition and your gut are almost always too confident. And the best forecasters recognize that, and they only use their intuition and their gut when they see all factors lining up, right? Your best forecasters won't rely heavily on intuition and gut for a very strong call more than a few times a year. They'll do it, a few or several times a year. And those that do it more than that wind up being really wrong a lot. And, if they're charismatic, they can work their way through being wrong a lot. And some people do, but I would say more can't work their way through being wrong a lot, especially when you're overly confident.
Yeah.
Okay. Sorry. I'm off the box. I'll put the whip away.
Get it ready again, because Zach's going.
Zach's going to get it easy from me now.
Oh, all right. I wouldn't mind. It's only fair since Michael got the whip. I can handle it for 10 minutes. All right. So hi everybody. My forecast for the period of November 18th to the 22nd is 143.7 HDDs with a 1 sigma spread of 25.5 HDDs. I pulled that number off the forecast sheet, not the 30-year normal spread. So this comes in about 3 HDDs warmer than the 30-year of 146.9. So going into my forecast process a little bit, just by seeing how the metrics have been doing over the last 30 days or so, the 30-year normal has been hard to beat. So that is the factor I weigh most heavily in my forecast. I do about 70% of the 30-year, 10% on the EC, 10% of the CFS, and I added 10% on this for the trend this week. What I was seeing based on some of the models, they were in pretty good agreement on some sort of trough in the west and ridge in the east. But there was a little bit of risk based on what I was looking at for the teleconnection patterns. It appeared that the CPC had the NEO in a positive phase and the PNA in a positive phase as well. and this is a bit conflicting in terms of what they see as temperatures on the East Coast. So there's definitely a bit of risk there as to which side of the coin it's going to go on, whether it be cold or warm on the East Coast. But I'd say there's definitely a warm risk in this forecast. You can see my metric is pretty close to the 30-year, which is the coldest metric here, but I still believe there's a good 10-15% chance maybe it'll be warmer than what is it, 120-ish is the lower end of my spread. So that's my 2 cents. Does anyone have any questions about that?
Zach, is that risk equally weighted? So 10 to 15% warmer than the low end of your spread and 10 to 15% higher than the high end of your spread, or would you say that there's a skew?
No, I'd say it's about equal. I
Okay.
haven't had any reason to believe over the last couple of weeks that I should skew my forecasts or be overly confident in one side or the other based on how my performance has gone.
Gotcha. So as a jerk client might tell you at this point, your forecast is pretty useless today. It's in line with everything. You're equally weighted, high or low. There's nothing I can do with that. So thanks. Talk to you tomorrow. That's what a jerk client would tell you. What Steve will tell you is that that's great. I mean, what you just said is exactly sort of where you fall. And there are many, many days where you're going to be right in the crowd and it's equally weighted high and low. And there are going to be clients that try to push you out of that zone. And there are going to be clients that tell you you're not worth anything if you're in that zone. And that's just not, it's just not right. So, Michael seems to have a view that could be useful if it's right. And your view is a little different. But it's important, I think, to not force yourself to try to go one way or the other, to try to stand out from the crowd when you don't think there's enough data to stand out from the crowd.
Gotcha. And I had a question for you, Steve, just based on some of the things that you were asking Michael. How do you communicate your confidence best without, because I know you're talking about Michael just being very precise in, like 5% chance it'll be warmer than his spread or whatever. Like how is it best to communicate confidence without, backing yourself into a corner?
It really depends on your client. So you sort of have to know who you're talking to. And so I'm just going to speak for myself as a client at the moment. So, I mean, first something that, and I'm going to generalize myself as well. So I represent a pretty quantitatively oriented client. So, my background has been through, the longest run I had on a trading floor was at Citadel, which is, a very quantitative place. So that's kind of where I come from. So when I hear Michael say 5 to 6% chance, he immediately loses credibility. Sorry, Michael. Because I know you can't be that precise. And so I know you're over communicating your confidence, which means I can't trust you. When you think about the fact that the spread here, Dave said from the beginning, is meant to be one standard deviation, I think using that for somebody like me who is quantitative, I think you want to use that number and basically say, and I know the tool here doesn't give you the ability to skew high and low on that, which is why I asked the question. So I think number one, knowing that you're basically saying, hey, there's about a 15% chance that it's going to come in warmer, a 15% chance that it's going to come in colder, and I know I'm kind of right in the zone, and then describing why you're there, I think that's the best way for a quantitatively oriented customer, I think that's the best way to talk about your confidence. And you use the range, you use that spread to really indicate whether you're confident or not. And then you communicate. So, Michael could very easily have said, hey, yep, there's 15%, there's 30% outside my spread, and I'm going to skew that. I'm going to say that 20% of that is on the low side, meaning warmer, and 5% is on the high side, meaning colder. Now that's something I can start to grab onto and say, okay, I see where your confidence is. I see that number one, your confidence is, or it may be right about the 30-year mean. I think a lot of people in the market focus on a 10-year. But for a qualitative customer, for somebody who's not quantitative, in my opinion, it's harder to communicate confidence. And I think you have to do it every day, meaning you basically have to say, last week my confidence was low, and this week it's high. And I think you want to stay away from average confidence, right? Because what does that mean? And then I think you have to go on to explain it. I think if I'm wrong, I think I'm more likely to be wrong on this forecast than I was on the last one, right? I think just being sort of very direct with that, I think, is the way to start getting people to tack in to your confidence level. Dave, your opinion here is pretty warranted as well. You're on a trade floor even longer than I was.
No, I think everything you said makes sense. The only thing I'd add is, sometimes, we provide this distribution, right, this spread. And I know the reaction is to try to be kind of what Steve said, more precise. Like you look at this and you say, it's not really going to be plus or minus 27 HDDs. I think there's a natural feeling that that's too big, but I don't think it is, right? I think the reality is that that's often what we see. Last week we didn't, but sometimes we'll go 4 weeks in a row where we're off by a lot, right?
Yeah, that's what we did.
Yeah, exactly. So I think, I guess also what I'm saying here is, utilize the historical distribution, right? And when you're talking to a client, rely on that data, right? Because that, I think, is something that they understand, will trust. So in other words, you could convert this very easily into a complete percentile chart from 0 to 100, so that you could tell them, you could have this chart that says, the 99th percentile error is maybe it's 45. That's the worst forecast we've ever seen, or whatever. And the best is maybe, 0. And here's the distribution from 0 to 100, 0, 10, 20, 30, however discrete you want to make it. And I think communicating and within those guidelines, I think is fine. So that if they ask you and say, what's 5%? You can say, well, historically speaking, the 5 percentile range error expectation would be, for it to be about 30 HDDs off. And I have no reason to go against that, right? So I think that is the most reliable forecast or expectation for that kind of error. And that's, I think they understand that, would appreciate that, and they can utilize that, I think, in a lot of cases in their decision making, i.e., okay, now I know there's a 5% risk that the forecast is going to be off by 35 HDDs. That's all I have. Hey, I know we're going to run out of time soon. I have one other client question for Zach. Paul Roundy, who's well respected in our community, he's got a much warmer forecast this year, 120 HDs. Zach, you're 143. That is quite a gap. It feels to me like you're discounting Paul Roundy. Why do you think he's too warm?
Well, I can't say for certain what his forecast method is. I have no way. I mean, he includes it there, but I have no way of knowing, getting into his mind and knowing what he's thinking. But I haven't really seen. I don't really see a lot in the forecast that should skew it so strongly on the warm side. I see, like I said, it's got about an equal chance that it could be warmer or colder than normal. So I don't know exactly what he's doing, but from my point of view, I haven't seen anything that shows me I should sway so far warm.
So what would you want to look into to try to get a sense for it? So again, I think if there's an opportunity here, it's probably on the warm side. So, what can you do to help me understand why there are a couple of folks, Paul and Luke, who are both significantly warm, and Michael, who was also, leaning to the warm side. I'm not asking to answer that question right now, but that's the kind of thing that I think you would want to go away and say, let me look into the factors that could drive the forecast warmer.
exactly.
What are they seeing? What are they thinking?
Exactly. And just keeping my client hat on. I know there's a practical piece to this that, you aren't getting paid a lot of money to do the forecast contest and you have finite amount of time. But with my client hat on and pretending you're in that position, that would be pretty unfulfilling to me. That if you gave me that answer, my response would probably be like, well, dude, it's right there. Look into it. I mean, he literally wrote the strategy right there and read more. And I think he has a link to his thing. So can you look into it? Let's find out. Let's find out if you think he's out to lunch or not. And if he's not, maybe we should put more weight on his forecast. So I think, to Steve's point, I think if you think it's a respectable forecast, or if you think it's at least worth considering, like let's investigate a little bit more. And another way to answer it, I think, in that situation is to say, I didn't have a chance yet. I'm going to look at this right after our call. Let me get back to you on this.
Mm-hmm.
I'm going to dig into this. I'm going to call Paul. I'm going to email him. I'm going to look online for papers, but I'm going to try to get more information so I can give you more informed answer. And it could even be that after you do that, you change your forecast and say, you know what, and another, I know we're short, but another way you could potentially answer that question, if you had dug into it, is you could say, Paul, he's more of a research scientist. Maybe you have enough to say, listen, I think he's an amazing research scientist, but Paul does not have a lot of experience forecasting. And I think he may be overconfident in some of these things. And, or you may say something about his statistical tools. He puts a lot of emphasis on statistical tools. You don't think there's been a lot of rigorous testing. Maybe you even asked him about it. And because you haven't seen rigorous testing of these statistical tools, you do not think you can justify putting significant weight on his forecast. I think some combination of those different answers could work, and be acceptable to your client.
When I answered that question, I was just also working under the assumption that I didn't know what he was forecasting or what his method is. When you're on a client call, do you have access to this kind of information? Or can they just bring up, oh, this is what this guy forecasted. What do you think about it? Is there any way for you to know?
Yeah, I mean, that's a great question. And I think it could be a little bit of both. But I think for the assumption, just for future reference for this, we should assume that you're going to have access to whatever is on here. Let's just assume that, right? And that's part why I asked the question, because I knew Paul's stuff was on there. So, but again, it's a little unfair because I know you guys don't have unlimited time to do all this.
And I think the right way to handle that is just to say, hey, I'm not sure what, and you said this, I don't know why Paul's going so warm. Let me go find out, and I'll look at the variables and I'll get back to you on what I think about them.
Yeah. And to answer that question, many cases, yes, we will talk to a client and they will bring up a forecast. Sometimes a group we've never heard before. A lot of times it is a group, and a lot of times we don't have access to it. So, if I'm working for Maxar, there's a good chance that I may not have access, certainly to everyone, but I may not have access to CWG that morning. I'm probably not supposed to, and I may not know it. So oftentimes the client will say something like, dude, CWG Mount Rogers is like 50 HEVs colder than you guys. What's up? And I think, right, what Steve said, at that point, you have to, you can ask questions to better understand, like they may send you a report, et cetera, that helps. Like you may say, can you send me what they're looking at? I really can't answer the question because I don't know what they're seeing. And the client usually in those cases will try to help you, and so that you can, provide more insight.
Hey guys, I got to run, but I wanted to thank you before I drop off here for your patience with my assholishness.
No, thank you so much, Steve.
All right, guys, I'll talk to you soon.
All right, we'll see you.
Bye.
See ya.
I think that was my. And by the way, those are also some of the most difficult questions. I think. I'm saying from my perspective, when a client asks me, basically, someone you respect, and they're like, why do you think they're out to lunch? Why do you think they're wrong? And sometimes they'll put it that way. And so first of all, you have to pull back and say, I don't think Paul Roundy is an idiot. I don't think, of course not. They may frame it that way, almost like not, just because they're trying to put you on the spot.
Yeah.
Like, dude, you're 50 HDs colder than the market. Why are they a bunch of idiots? And you have to be like, I don't think they're a bunch of idiots. I'm different, and here's why. But it can be difficult because there's a tendency to get defensive, or there's a tendency to say things that to be overconfident, or to say things that you really don't know. You may not know why they're so different, but you feel defensive and you start kind of mixing fact with fiction a little bit. So it's a difficult one. We'll keep doing it every week to try to practice.
Hey Dave, I had a quick question if you have the time. So I know Steve said that you shouldn't be overly confident. I agree with that, but so let's say for my forecast, instead of my 5 or 6%, I went with 20% warmer, 10% colder. Because I do think it'll be, I think it'll be warmer, then it'll be, I want to skew towards the warm side. But looking back at, because I was curious, I wanted to see how many times historically it had been actually warmer than 108 HDDs. And looking back, I think, there's only one time in the last, I think, close to 68 years, that it's been warmer than 108 HDDs for this period. So how should I go about trying to communicate that it'll be warmer, but probably won't be warmer than 108? So like warmer than my forecast is possible, or probable even, I'd venture to say based on my performance, but how do I communicate that it'll be warmer than 135, but it'll stay within the range without sounding like I'm overconfident? It's basically what I'm asking.
I think letting the numbers speak for you. Zach, would you mind pulling up our Google spreadsheet? Because on our Google spreadsheet, I think we have a percentile thing. And I think, using that as a reference is probably a good place to start. So I guess if I understand your question right, where's that? We used to have can you go to my analysis? Let me see if I have it on there.
This one right here?
Third tab. Let's see if I have it here just to make it a little easier. Yeah. Go down to like F16 and just so you can see that that table that's right around.
Yeah.
All right, there we go. All right, so so Michael, you can see this is a percentile table, right? It shows the historical HDD values for this forecast from the lowest to the highest on record. So 0 represents, in this case, the warmest, and 1 represents the coldest. With me so far?
Yeah.
Okay, so I mean, I think if I understand your question, and there's variants of this, but if I were communicating to a client who is really interested in exact risk, right? And some are, right? Because they're making trades that they're in the money if it happens 5% of the time, but they're not in the money if it happens, 10% of the time. I mean, that happens a lot. I would rely on something like this, and I might even make it more discreet. And let's just say this was this is right. This is historical values, and I think this is the best distribution. So I would fall back to say something like this, like, hey client, whatever. Hey John, so my centerline forecast is near normal, which is 133.2, and I think the one standard, although the one STD doesn't quite fall out of this, but let's just pretend it's between 0.3 and 0.7. Just it's close. It's kind of close, or between 0.2 and 0.8. Let's just pretend. So I'd say, hey, John, the one standard deviation range on the low end, I think is about 115. On the high end, historically, it's about 153. Now, John, if you're concerned tail risk, and I understand you are, I think pretty good boundaries here that get you close to that 0 and 100% are going to be at the historical values, John, because this is a 50 or 60 year distribution, whatever this is. The lowest on record is going to be about 74, and the highest is going to be about 190. And I really think those are probably pretty close to your 0 and 100. I mean, obviously there's some chance and stuff, but that's pretty close to being near your 0 and 100 bands. And I'd probably say something along those lines.
Okay, yeah, that makes sense.
There could be a special occasion where, records are broken all the time, right? We know that. And, so there could be a caveat type thing where, maybe your forecast is 195. And you're going to say it like, hey, John, listen, I know we are forecasting a record cold pattern. And obviously you're going to want to tell them why. The reason why we are colder than any of these and is because, this is the strongest Alaska ridge that's ever been forecast. And, et cetera, et cetera. Coldest air mass that we've ever seen in Canada. So, there could be scenarios I could see like that, but you just want to hopefully be able to match the evidence or provide the evidence that supports your forecast.
Okay, yeah, that makes sense. Thanks. The only other thing, I know we're a bit over on time, is so I won't show it, but I did put in the an executive summary. So if you get a chance at some time to look at that and let me know if I need to change anything, email, call, whatever you want to do. Just let me know.
Okay. All right. That's great. Yeah. Let's, I'll look at that offline. And then let's try to catch up here some point during the week.
Yeah. Okay.
All right. Great. All right. Back over to you.
Unless anybody else has any questions, any comments, this will be the end of this forecast discussion. I think it was very good for Michael and I to get grilled. Michael more so than I. So next week I'll definitely go first. So I'm the one who gets grilled. But yeah, good discussion, and we'll see you all next week. Enjoy the rest of the day.
All right. Great. Thanks, guys. Thanks, Mike.
Yep. See ya.
I guess.